Hey there, Joshua Parker here from goldwithjoshua.com and investingoldcoins.net. And today I'm going to do a kind of a review of this great recent book, or book that I recently finished from Mike Maloney, which is called The Great Gold and Silver Rush of the 21st Century. And actually, what I'm going to do is I am going to review just chapter 7. The reason is that this book, it covers like a huge array of like the history of precious metals, from way back. And the reason I am going for chapter 7 specifically is it's kind of our recent history, which a lot of us out here have lived through. Not all of us, but some of us have lived through the 1970s and like the era between 1970 and 1980, and how that rush in precious metals affected massive amounts of people in terms of their wealth. And as Mike Maloney is arguing in his entire book, is that we're basically on the precipice of the next phase of what some people experienced in that time frame, and with an even more massive upside, just because of the way all the statistics line up right now. And so I'm going to explain, and go get this book. This is a really good book. It's not like it's like easy to follow, because he's a great writer, and there's like tons of diagrams and charts in here which are explained so well. And he's also got an online resource at ggsr21.com. So you can actually read some of at least when I checked a month or two ago, it was open access. You just, some of the areas maybe you have to put your email address in to get access to, but there's like 2 chapters that are, that he wanted to make sure he could update, so they're freely available. So check that out at his website and get the book. It's really, and this is not a paid sponsorship or anything. This is not a sponsored video, but I'm promoting some of my own things because I have some websites associated with this type of thing, with investing in gold and silver, precious metals. I am not a financial advisor, so don't do your own due diligence and do your own research and make your own decisions. But what he puts out in this book is phenomenal information, so read the book. But let's get to chapter 7. So he calls chapter 7 enormity squared, and the idea is that this is comparing right now to what happened in the 1970s, from 1970 to 1980, or early in 1980. That was the big boom in precious metals, arguably like the last big boom. I mean, there was another one that kind of concluded in 2011. I think some people would probably argue that what we're experiencing now is kind of a continuation of that, because the fiscal policy that followed 2008 has really just kind of put bandages over the situation and really didn't actually resolve any of the fiscal wrongdoings of the time before 2008, when the real estate bubble really collapsed in a major way. But so in 1970, the interesting thing, if you look back, and a lot of folks haven't realized that in 1970 it was actually illegal in both the U.S. and Canada to purchase precious metals, gold and silver. And it wasn't until 1975 that precious metals were legal to actually acquire and hold in the U.S. and and 1976, I believe, in Canada. So, and at that time, even the rest of the world was much slower to respond to legalizing the possession of precious metals. It was illegal in China and India and most of the world. It was actually illegal to possess precious metals, and the exchanges just didn't exist. So the reality is much more massive right now, because the entire world is open to being able to purchase precious metals now, whereas it was just kind of a closed, limited market back then. And in 1970, an ounce of gold was $34.75. This was basically right before the gold standard was completely eliminated, and that's when the peg was removed, and gold was able to freely float with on the open market. And silver was $1.29. And keep in mind, this was just a few years after the coinage was, the silver was removed from coinage in 1965. So in pre-65 is those old silver coins that had 90% silver. And that's why the suppression of the price of these was kept in this particular area. For gold, it was because the dollar was at least a percentage backed by gold. For silver, it was because the coinage was such that if the price of silver moved beyond that, above that price, then someone could literally just melt down their silver coins and sell the silver for more than what the coins were worth. So it has to do with the amount of silver in a silver dollar, for example, or a quarter, etc. And it took like 1.3 something, right around 1.3 coins, silver dollars, to equal an ounce of silver bullion. So that was the price fixing of that era, and why once that was removed, and the prices were able to basically shoot to the moon by 1980. So this is 10 years, really only 5 of which in the U.S. where it was legally to purchase the metals. The silver went to $52.50 an ounce in 1980, and gold went to $873 an ounce. So this is $34.75 to $873 for gold per troy ounce, and for silver it was $1.29 to $52.50 an ounce for silver. Now, as I do this video here, we're not even halfway on the spot price of silver to the high in 1980, $52.50. We're right now sitting below $25 per troy ounce of silver. Arguably, in my opinion, of course this is just my opinion, I'm not a financial advisor, like I said, the bargain of the century. This is a great deal. So this, and if you think of it in a different way, and this is all explained very well in chapter 7, like I'm telling you, this is a review of chapter 7. If you had owned a house in 1970 and decided to sell your house in 1970 and buy silver at $1.29, of course, was that legal? You probably would have had to buy a bunch of silver dollars and coin and pre 65 coins to do this, because you couldn't actually go to a coin shop and buy bullion at that point. But let's say you did, and but let's say in this case you were to buy gold at $34.75 an ounce. At the end, in 1980, you would be able to buy 9 homes if you sold your gold in 1980. 9. So sell one home. So people rave about the real estate market and how I bought this house and now it's worth so much more. But is it really just that there's that much more currency in circulation? Because if you go through this book and other people like Mike Maloney, you'll see that there's a big difference between currency and money. And of course he argues, which I subscribe to as well, that silver and gold are real money, and because they're a store of value. Whereas the Federal Reserve notes are actually currency, so they're not anymore backed by gold or silver. So the amount of currency that's in circulation is really what changes the quote unquote value of the home that you might have invested in. So this is an important thing to consider, especially when you also considered that if you had allocated in 1970, sold the house and bought a bunch of silver, then at the end of this period, this 10-year period in 1980, sold the precious metals at the silver at $52.50 an ounce, you would literally be able to buy 16 homes. Talk about starting a real estate empire, right? And so this is the kind of phase I believe, and obviously Mike Maloney believes, that we're in right now. And that's why there's so much upside. And this gets into, because there is literally 54.8 or approximately 55 times as much currency, Federal Reserve notes, in circulation now versus what there was in 1980. 55 times. I'm not talking about 1970, when there was still some backing of to gold and not really silver coinage, but there was still some gold backing of the U.S. dollar. But now, between 1980 and today, there's 55 times as much currency in circulation. There's that much more. So, of course, a house is going to relatively acquire more of these Federal Reserve notes to purchase than it would back in 1980, because there's that many more of them around. It's called debasing the currency. That's what it's really called. And back historically, they would just take some of the gold out of the coins, and now you know what they do. They just print more of it, and they still call it a U.S. dollar or a Federal Reserve note, but your purchasing power goes down because there's more of those around to acquire goods and services. So, if you had invested in gold, nine homes compared to selling in that 10-year period, if you had let your precious metals mature in value, gold, it was 9 homes, silver, 16 homes. So for gold in that time frame from 1970 to 1980, we're talking about a 25.1x increase in value. And for silver in that same time frame, we're talking a 41.5x increase in value. This is why we're talking 9 homes compared to 1 in 1970, and 16 compared to 1 in terms of silver. So 9 in terms of gold, 16 in terms of silver. So, you know, which is a better investment right now? Real estate or precious metals? You tell me. I'm just here to provide this review of this great chapter in this great book. You know, and keep in mind, this was at a time where the real estate market actually only increased by 2.3x, and the stock market, measured, I believe, by the S&P 500, only increased by 1.3x. You know, like, this is like basically just no real change in those markets, yet precious metals, we're talking 25.1 and 41.5x. Precious metals went to the moon, basically. And maybe that's what we're about to face now in times of bank failure and, you know, ridiculous fiscal policy by our elected officials. So these were massive, massive gains. And this was at a time when, literally, like in 1975, when these coin shops started offering bullion for sale, you'd have to wait in lines around the block, like literally, like wait for hours and hours and hope they had something left. So, you know, now, of course, we're dealing with online transactions, you know, but there is still a very limited supply, especially of silver. The reason why it's even more limited with silver is that as the price goes up with gold, there's more demand in the mining sector, and therefore more of the gold will be minted into coins and rounds and bars. Whereas in silver, as we head more towards a recession, the problem is a recession brings lower production, and that brings a decrease in the price of base metals like copper and zinc and nickel and these other metals, and that is where the silver is mined. It's more with the base metals. So as the base metals go down in price, there's less mining activity in the silver sector and less produced. So this is why, you know, and I wrote about this on investingoldcoins.net. So you can look at this article on the GSR, the gold-silver ratio. It's an important ratio to consider when deciding which metals you're going to buy at any particular time, because depending on the ratio at that particular time can tell you a bit more about which one has a higher upside potential than the other, and so that's an important factor, and the other thing that is important to understand is that silver is really an industrial metal. All this technology that is in such high demand for, the whole tech sector relies on silver. Every phone, like anything you think of that's technology based, doesn't have to just be solar panels or, you know, whatever someone's telling you about. Anything, cameras, phones, they're all relying on silver to make these products and to make the technologies work. So Maloney also gets deeply into price manipulation and how this is more in recent times, where I mean, you could argue that, and he does that in the 70s, well, prior to this phase that I'm talking about, in between 70 and 80, there was a government price fixing in the precious metals market, because gold, for example, was fixed and because it was backing the US dollar, and that's why it was illegal to possess it. And silver was fixed because it was it was in the coinage, and that's why it was essentially illegal to possess it as well. And now the manipulation is in the paper markets of silver and of gold, and that's why, of course, J.P. Morgan was given a $980 million fine in 2020 for manipulating the prices in the precious metals market. And two Deutsche Bank traders were sentenced to a year in prison for their manipulation in the precious metals market. I'm not sure what criminal crimes they were guilty of, but this is, and there's even more still going on, manipulation in the prices. This has to do with paper markets, futures, and options, and different things that manipulate thereby the prices of the physical commodities on the marketplace. But overall, as the demand increases, especially with the silver, the supply diminishes, and it gets harder to acquire the smaller increments, especially the 1 ounce rounds or 1 ounce coins. Of course, the difference between a round and a coin is depending on who is minting it or pressing it into a round. So that's another story. But yeah, these manipulations of the markets are a big factor, and in terms of looking at what we're facing for the future as these manipulators of the markets are taken off the table. Because if it gets, as it's getting harder and harder for them to keep manipulating these markets, then it allows the actual value and the actual price to meet and become a reality, and that's when potentially silver and gold could go parabolic, and that's then when some of us, if we were in the right place at the right time, might be able to see 16 or so homes instead of one. So we'll see how all that works. Another thing to consider is that back in those days, in the 70s, people weren't considered investors. This was a time when you could go to a bank and get 13.1% interest rates on just depositing into an IRA type of account. And if you compare that to today, I mean, we're talking about a difference between being able to put $100,000 into an account and in about 5 years return another 100,000 versus now at like a 0.04% interest rate, being able to potentially get $100,000 interest return after 1,700 years. 1,700 years. How many lifetimes is that? I mean, it's just, it's crazy. So, and this was literally what you could go into any bank and get an IRA account like that with 13.1% interest rate. It's just, people don't even believe that was real. But that's how it was back then. So now there's more millionaires, more billionaires, more assets under management, and the reason there's so much more is because there's literally 55 times as much currency in existence as there was in 1980. So with the ballooning of the kind of these everything bubbles that's going on in our world right now, then we end up with just more assets to manage. And really it turns everyone into like a Las Vegas gambler, like throwing their money on red, and where does this lead to? It's like at some point, these Ponzi scheme leaders at the top are probably just going to pull the rug out from underneath the whole system, because the system of money printing is out of control, and it's not going to just resolve itself under these fiscal policies that we're seeing right now, and under the continued bank failures and bailouts and you name it. It just keeps going and it keeps going, and that's why they have all these shows nowadays. It's like, there used to just be the Wall Street Journal, and you had to wait the next day for the previous day's news. And now it's like by the minute you've got, how many different websites and different shows reporting on the finances going on in just every country, but especially the New York Stock Exchange and the U.S. markets, or the one, like, it's the failing one at this point, but it's the one that everyone's paying attention to. So thank you again for watching. I am really sorry about the lighting in this video. I really thought that this was going to be a quicker video, and I'm shooting this outside and in daylight, and kind of lost some lighting here. But thank you again for sticking with me and watching this. And I'll see you on the website, and I'll see you next time. There's the turkeys saying bye too. Please visit me at goldwithjoshua.com and investingoldcoins.net.